China's unicorn startup scene has doubled in the past 5 years, with more than 300 unlisted firms valued at or above $1 billion. These companies align with the Chinese government's goals for technology, particularly in green energy, semiconductors, smart manufacturing, software and artificial intelligence, and biotech. This shift is central to President Xi Jinping's plan to make China less dependent on foreign tech, particularly as the U.S. is attempting to starve Chinese companies of advanced semiconductors. State firms are underwriting much of the recent growth, and the unicorns are cropping up outside the established tech hubs of Beijing, Hangzhou, and Shenzhen. Although some firms fall off the unicorn list because they go public or tumble in value, others have gone from strength to strength. For example, Greater Bay Technology, which specializes in super-fast lithium battery charging, reached a valuation of $1 billion only 19 months after launching in late 2020. However, some firms have fallen off the unicorn list due to going public or losing value, such as Ant Group, whose IPO was cancelled at the last moment in 2020, leading to a significant drop in valuation from over $300 billion to around $64 billion. According to data from China's Ministry of Science and Technology and Huron, China's unicorn startup scene has seen a significant increase in the past 5 years, with over 300 unlisted firms valued at or above $1 billion. There has been a shift away from consumer internet firms and toward industries that the Chinese government believes will drive the economy in the future, including green energy, semiconductors, software and AI, smart manufacturing, and biotech. By the end of 2022, software and enterprise services were the largest group, followed by health and biotech. Many fintech companies and education technology firms have disappeared from the list. The geography of innovation has also shifted, with startups emerging in new places outside the established tech hubs of Beijing, Hangzhou, and Shenzhen. Some large cities known mainly as hubs of manufacturing are becoming startup havens, while smaller cities and even remote regions such as Qinghai and Tibet are seeing unicorn growth. The number of AI unicorns increased from 6 to 35, while dozens of green energy and robotics unicorns emerged. By the end of 2022, there were around 30 unlisted semiconductor companies valued at more than $1 billion, compared to none in 2017. The influence of China's biggest tech groups, collectively known as BAT, Baidu, Alibaba, Tencent, has declined in the country's venture capital industry, having invested in only 21% of unicorns in 2022, compared to half in 2017. The shift is partly due to a government crackdown on monopolistic behavior, which has caused these firms to invest less. However, new funding sources backed by the state have emerged, with government-backed funds investing in or controlling 48 of the 50 semiconductor unicorns identified by state media at the end of 2022. Moreover, many large state firms are taking on the role of startup incubators, with Guangzhou Automobile, GAC, a state-owned carmaker, funding Greater Bay, the youngest of 4 unicorns launched by GAC. By handing out funds to startups, GAC is becoming a transportation tech nexus, while Rookie Mobility, an ION-funded ride-hailing startup, is expanding nationally using gear from Greater Bay and ION, backed by GAC. Chinese state-owned companies are increasingly launching startup subsidiaries and competing for cash and talented engineers alongside private firms. Qiyuan Green Power, a Shanghai-based startup that provides battery charging and replacing services for large trucks, is one such example. It was launched by State Power Investment Corporation, which holds a controlling stake in Qiyuan. Qiyuan looks much more like a startup than a typical government-run company, and it has initiated funding rounds to bring in private investment. Private companies are also increasing their investment in startups. Huawei, a privately owned telecoms equipment maker, has invested in at least 91 startups since 2019, according to data compiled by Itjuzi, a Chinese investment intelligence firm. The Chinese government is regulating certain areas while allowing market forces to operate freely in others. However, new bubbles are being created in emerging industries, according to an investor in green energy. Investors are confused whether the companies have the best technology or only have good connections around the government.